Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Welcome to Tax Smarts Unlocked. I am David Robson, here to make your first hire a tax smart move. Today we tackle classification, registrations, payroll taxes, benefits, credits, and the traps that cost real money. Expect practical checklists, quick planning wins, and a case study. Grab a coffee and let us hire smart without paying $1 more tax than necessary. Start with worker classification. An employee follows your direction for how, when, and where the work is done, often uses your tools, and depends on you economically. A contractor controls method and schedule, serves many clients, and bears profit or loss. Misclassification triggers back payroll taxes, penalties, and labor claims. Contracts help, but facts rule. When unsure, file Form SS-8 or ask a pro before you pay. Entity choice decides who can be on payroll. A sole proprietor cannot be their own employee, and neither can a partner. They take draws or guaranteed payments. S Corporation and C Corporation owners who work must receive wages for services. That distinction drives withholding, payroll taxes, and the reasonable compensation rules we will revisit. Set up the infrastructure early. Get an EIN. Register for federal and state payroll accounts, including withholding and unemployment. Decide between in-house payroll, a provider, or a PEO that becomes employer of record. Compare costs, deposit guarantees, and multi-state support. Build a payroll calendar, matching cash flow, and state pay frequency laws. Do this before you post the job. Onboarding starts with paperwork. Collect Form W-4 and any state equivalent. Complete Form I-9 within 3 business days and verify identity and work authorization. Set up direct deposit and a paper backup. Provide required notices like wage statements or sick leave where applicable. Report new hires to your state on time. Capture emergency contacts, policy acknowledgments, and benefit elections. Store I-9 separately and secure sensitive files. Payroll taxes have 3 parts. Withhold federal and state income tax per the W-4. Withhold and match FICA for Social Security up to the wage base and Medicare on all wages. When an employee crosses $200,000 in a year, withhold additional Medicare from the employee only. Use EFTPS for deposits and schedule them with your payroll run, not after the fact. Unemployment taxes are separate. FUTA is 6% on the first $7,000 of wages, offset by a credit for timely state unemployment payments. Credit reduction states increase your FUTA cost. SUTA is experience rated, so new employers start with a default rate that adjusts with claims. Plan cash flow for quarterly bills, and watch how raises or turnover can change next year's rate. Know your cadence. Most employers file Form 941 quarterly. The smallest may use Form 944 if the IRS invites them. FUTA is on Form 940. Deposits for withheld tax and FICA are monthly or semi-weekly from a look-back period. Hit $100,000 in liability in a day, and a next-day deposit is due. States have separate calendars and rules. At year-end, reconcile payroll to your books. Issue Forms W-2 to employees and file the W-3 with Social Security. Many states require copies or separate reconciliations. For contractors paid $600 or more for services, file Form 1099 NEC. Confirm names and taxpayer numbers and tie your final 941s, W-3, and state totals together. Expense reimbursements can be tax-free with an accountable plan. Write a short policy requiring a business connection, timely substantiation, and return of excess advances. Mileage, travel, supplies, and home office utilities can qualify when documented. Payments outside a plan are taxable wages. Collect receipts within 60 days and keep electronic copies so audits do not turn reimbursements into payroll. Fringes influence taxes. Some benefits are taxable wages, others are tax-free when structured correctly. De minimis items like occasional snacks are excluded. Employer-provided cell phones for business use are tax-free. Educational assistance can be excluded up to the annual limit, including student loan repayment for now. Commuter benefits have monthly caps. Cash or gift cards are almost always taxable. Track benefits separately in payroll. If group health is out of reach, consider a QCRA for employers under 50 full-time employees or an ICRA with classes. You reimburse for individual coverage or medical expenses, tax-free up to limits. Coordinate with premium tax credits so no one loses a subsidy unexpectedly. Offer a small group plan and meet wage and contribution rules, and the small business healthcare tax credit may offset premiums for 2 years. Simple IRAs are easy to administer, with a match or a 2% non-elective contribution. A 401k offers higher deferrals, Roth options, and profit sharing, especially with a safe harbor design. Secure 2.0 added generous credits covering part of startup costs and, for very small employers, part of early employer contributions. Choose a plan that fits cash flow and hiring. Communicate the match so employees see and value it. Wages are only part of the cost. Add employer FICA, FUTA, SUTA, workers' compensation, payroll service fees, and your share of benefits. Include paid time off and holidays when setting prices. Build a loaded labor rate that reflects the all-in cost, then price services accordingly. Forecast the first 90 days of cash needs because taxes can hit before revenue does. For many pass-through owners, the Section 1999A deduction can hinge on wages. In higher income ranges, the deduction is limited to a percentage of W-2 wages and property. Paying employees may increase the wage limit and preserve a deduction you might otherwise lose. The rules vary by business type and whether it is a specified service trade, so model the numbers before year end. S-corporation shareholder employees must take reasonable compensation for services. That means what you would pay someone else with comparable training to do the job, given geography and responsibilities. Underpaying invites payroll tax adjustments and penalties. Overpaying can reduce QBI and add taxes. Document the salary decision with market data, revisit annually, pay through payroll, and withhold like any other employee. Bonuses and commissions are supplemental wages. For federal withholding under $1 million for the year, you may use the flat 22% rate, or use the aggregate method, adding the bonus to the regular paycheck and using the tables. FICA applies either way. Plan deposits so big bonuses do not trigger a surprise next-day deposit. Remote and multi-state workers create nexus and withholding issues. Generally, you withhold and pay SUTA where work is physically performed and register for withholding there. Some states and cities have local taxes. Reciprocity may allow resident state withholding with a certificate. Track days for mobile staff. Convenience rules can complicate remote setups. Missouri listeners, register for state withholding and unemployment before payday. If staff work in St. Louis or Kansas City, review earnings tax rules and withholding. Some days outside city limits may be exempt, but document. File required local returns even when no tax is due. In a sole proprietorship, wages to your child under 18 are exempt from FICA, and wages to a child under 21 are exempt from FUTA. Spouse wages are subject to FICA but exempt from FUTA. These breaks do not apply in corporations or partnerships with non-parent partners. Pay real wages for real work and document hours. Workers' compensation premiums depend on accurate job classifications and payroll. Ask about pay-as-you-go options that sync with each payroll run, reducing surprises at audit. Keep certificates of insurance for subcontractors to avoid being charged for their payroll. After the policy year, respond to the audit quickly and reconcile to your payroll reports. Keep payroll and employment tax records at least 4 years. That includes W-4s, time cards, rate changes, deposit receipts, filed returns, and benefit elections. Maintain I-9Ns separately from personnel files and secure anything with Social Security numbers. Retention helps with agency notices and speeds any future sale or loan. Case study: Dana pays a contractor $90,000 for full-time work. If reclassified, Dana could owe employer FICA, FUTA, SUTA, penalties, and interest. Using payroll instead, Dana budgets taxes, adopts an accountable plan, adds a simple match, and creates W-2 wages that preserve the full QBI deduction. Pro tip: call a professional before the first payday to set accounts, choose a payroll system, draft an accountable plan, evaluate benefits, and confirm filing calendars. A 1-hour consult often saves far more than its fee and avoids ugly notices. That is a wrap. Today we covered classification, entity rules, registrations, onboarding, payroll taxes, unemployment, filing cadence, year-end forms, reimbursements, fringe benefits, health and retirement options, labor cost, QBI, owner pay, bonuses, multi-state and Missouri specifics, family hires, workers' comp, record retention, plus a case study and pro tip. If this felt like drinking from a fire hose, call a pro and let's set it up right.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services. Each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.